This is Ebony Biko, your mortgage strategist and home financing best friend here over at Home Loans Network, powered by Marty. I want to introduce myself as to let you know that I have spent over 25 years in the mortgage and real estate industry, helping first-time home buyers and real estate investors understand the mortgage process so they will be able to close without any confusion and buy with no stress. You have tuned in to my podcast, the Home Loans Network podcast, where I will actually break down the mortgage process, the language, and how you can actually start making real estate and financing decisions and move to the next level. So today, I am answering one of the most common and most understood questions I get. What is the difference between a pre-qualification and a pre-approval? And why is it important? Let me explain. If you've ever been told you're pre-qualified and that you actually thought that you was in good hands, well, this episode is for you. Borrowers often confuses a soft check with a verified approval, which is totally different. And that is a misunderstanding that can actually cost you your dream home, delay your closing, or weaken your negotiating power when it comes to sellers. When it comes to sellers, your negotiating power, that is going to be between you and a real estate agent that you have chosen to work with you to help you negotiate. So in this episode, I'm going to break down what is a pre-qualification, what a pre-approval really is, how lenders look at your income, your credit, and your debt, why a true pre-approval is so powerful in today's market, the practical tips to move from I think I qualify to I'm fully ready to buy. So let's get started. Now, what is a pre-qualification? A pre-qualification, this is where most people get confused and they try to go see a property that they think they are pre-approved for or they are pre-qualified for without having all of the full details. Just to turn around and pick out a property that is well above their means that they can afford on paper. So, a pre-qualification is based on the information that you told the lender. Don't mean that that's what your actual information is, but it's based upon what you told the lender. It may usually involve a soft credit check or sometimes no credit pull at all. It's not fully verified with documents. Think of a pre-qualification as a quick estimate. It's an answer to your question, but it's not the actual right answer. Based on what you're telling me about your income, about your debt, about your credit, here's a rough idea of what I think you may qualify for. So that is a pre-qualification. So with a pre-qualification, that lender may ask you, what is your estimated income? Keep in mind, they don't have your pay stubs. They don't have your income. What is your estimated monthly debts? Hey, your estimated monthly debts may be what you actually are paying out that you want to pay out, not what you really should be paying out. That monthly debt may be credit cards, car loans, student loans, etc. It's a ballpark of your overall credit profile and you. Your credit score, they're going to ask you, what is your credit score? Again, that's just an estimate. It's what you assume. Your credit score last month could have been 758. Your credit score this month could be 620, but you told them 758. Or you was looking at Credit Karma versus an actual credit report because Credit Karma only gives you an idea of what your credit is. So it kind of gives you something to work with. But here's the thing. What they don't usually have or ask for when they're doing this pre-qualification, they haven't reviewed your pay stubs, your actual real pay stubs. They haven't actually verified your tax returns, meaning through the IRS, so it's verifiable. They have not looked at your down payment and see what type of down payment that you actually have, if you actually have money in the bank to put down. So pre-qualification is helpful for getting a general range, but it is not a commitment from the lender, and it is not something a strong listing agent or seller will rely on, especially in a competitive market. So when is a pre-qualification useful? When you're just starting out, when you're starting to explore about buying a property, right? You want a rough estimate before you even get serious. You're starting to clean up your credit, so you need to figure out what needs to get paid or what you need to pay down. But remember, it is only a starting point. It is not a green light. Now, what is an actual pre-approval? Because we just talked about the pre-qualification. Now, let's think about a pre-approval. This is the one that really matters. When you're ready to start shopping seriously, you're going to get a pre-approval. The approval is the approval when you found the property, but the pre-approval, you haven't found the property yet. Okay? So the approval comes after the pre-approval once you go through all of the proper steps and protocols. Now we're going to talk about this pre-approval. A true pre-approval is document-based and verified. It includes a hard pull credit report. It uses actual numbers from your financial documentation that you provided, such as the bank statements, meaning how much money you actually have to put down. With the pre-approval, those documents are actually reviewed by an underwriter and goes through the automated underwriting system. That pre-approval is actually how you're going to prove that you are approvable. For pre-approval, your lender will typically review when it comes to your income, your pay stubs, W-2s or 1099s, your tax returns, especially if you're self-employed or you're commission-based, or you own several rental properties and you are using this for the purpose of qualifying when it comes to your income. They're going to also look at your assets, your savings, your bank statements, any retirements or 401ks. The reason they're going to look at that, because what if that's the money that you're going to be using to put down? Which means if you're going to be cashing out your 401k and then there's going to be a large deposit in your bank account, they're going to want to know where that large deposit came from, which you have proof that it came from your IRA, your 401k, or you cashed in a stock. They're going to be looking at your debts because, again, that's where the debt to income ratio come in at. Your credit cards, auto loans, student loans, any personal loans. They're going to look at your credit profile, your credit score, your payment history, any late payments, collections, or disputes. From there, we're going to actually calculate your debt to income ratio, which is also known as your DTI. That DTI is going to help you determine and help us determine how much you as a borrower and a buyer can actually realistically afford. What type of loan programs that you fit, whether it's a FHA, conventional VA, USDA, etc. And those particular type of loans that I talk about more in other podcasts and videos. An estimate pay range. All of this information is going to tell you what you can actually afford monthly. At the end, you'll receive a pre-approval letter that says, based on the information that you provided and that was verified, this particular borrower is pre-approved to purchase of a home for up to XYZ, and their down payment is going to be XYZ under those particular conditions. This is powerful. This shows a seller and a real estate agent that you are a serious buyer. So now let's talk about a soft check versus a verified approval. Here's where borrowers get confused. Pre-qualifications often uses soft checks or verbal information that is given to them by the buyer/borrower. Pre-approvals uses hard credit pulls and full verifiable documentation. So remember, a soft check is only going to give a preview of who you are. A verified approval gives you proof. It is proof that the information that you have provided is correct and verifiable. When you're out shopping for a home, especially in a competitive market like Chicago or in a hot area like Tampa, Florida, or Miami, sellers want proof. They don't want guesses. So let me give you a real live example, and I want to paint a picture. You fall in love with a home. It's perfect. You write an offer with just a pre-qualification letter. Another buyer actually comes in with a full pre-approval that their stuff is verified, their income and credit and assets already verified. From a seller's perspective, who looks stronger? The borrower who might pre-qualify with information that was verbally given but not verified? Or the buyer who has already been vetted and the lender has basically said, we're ready to go? 9 times out of 10, that seller is going to go off of the person that is a pre-approved buyer, even if the offer prices are similar. Also, if you're only pre-qualified, this will potentially happen to me. Overestimates of what you can afford. You'll get surprised by low approval amounts and actually honestly disappointed. You realize late that your credit and your debt to income needs to be worked on. So you haven't been able to do that. So now you lost out on the dream property that you're looking for. You will experience closing delays because documents weren't actually reviewed and verified. A true pre-approval will help you avoid late, last-minute surprises. It positions you as a serious buyer and ready to go. So when you're looking to get pre-qualified and you're ready to get pre-approved, if you're listening and thinking, okay, I'm pre-qualified, but I'm ready to truly buy. I'm ready to become a buyer. I'm ready to invest. Here are the steps that I need you to take. So go ahead and get your pen and paper. Pause this. Number 1, get your documents together. To go from pre-qualified to pre-approved, you have to have your documents together. Last 30 days of pay stubs, last 2 years of W-2s or tax returns, last 2 to 3 months of bank statements, your ID and your social security number. And sometimes they want you to have your social security card handy. Be honest about your debts and your income. Don't round up your income and don't forget about debts. The system, which is the automated system, will actually catch and re-verify this information. So it's better to be accurate from the beginning. Let your lender run a full credit check. Don't be afraid of a hard pull. 1 or 2 mortgage inquiries in a short window generally will not destroy your credit. It will not mess up your score. And you need that to be accurate, to be honest with you, for real approval. Ask your lender to explain your numbers. Have them walk with you through the process, your debt to income ratio, your estimate payment, and the different price points, how taxes and insurance and HOA, which is homeowners association, impacts your monthly payment. And an HOA is only if you're getting a condo, or you could be moving in a townhome community that actually have HOA fees involved, or even a housing community, like a gated community that has HOA fees involved. So that plays a big part. Use your pre-approval as a buying strategy, not just as a ladder. Your pre-approval isn't just a piece of paper. It's your game plan. It's your blueprint. Once we actually know your numbers, that's where we as mortgage loan officers and loan originations and a mortgage community as an overall can actually help you. Decide your comfortable price range. Structure an offer that makes sense. You're going to structure that offer that makes sense with your realtor, your real estate agent. Then you're going to be able to adjust the down payments or loan types if necessary. So let's just do a quick recap. Your pre-qualification. It's a quick estimate, usually based on self-reported information and sometimes a soft credit check. It's good for getting an idea, but not strong enough to rely on for a realtor or real estate agent or a seller to take you as a serious buyer or to take your offer serious. A pre-approval, on the other hand, is verified, approvable information with documents that has been verified. A hard credit pull and actual underwriting guidelines apply, whereas you will have this pre-approval with stipulations and is subject to other things. This is what sellers and the strong agents want to see. So knowing the difference protects you from surprises. It makes your offer stronger and it makes your home buying journey much smoother. more confident, and more strategic. So, if you're listening and you're thinking, I don't just want to be pre-qualified, I want to be a true pre-approved buyer. I want to be a true pre-approved borrower and be able to shop with confidence. I got you. I am Ebony Caldwell with Home Loans Network, and I need you to visit my website to get your pre-approved today or to be able to schedule a one-on-one consultation with me as to how this approval process works. You can also give me a call at 312-392-0664. So whether you're a first-time home buyer, you are a seasoned buyer and you start getting into investing in more properties, whether you're a real estate investor, my job is to help you understand your options, break everything down in plain English, and build a loan strategy that's going to fit your life and your future goals. Also, Wind Down Wednesdays reminder. Don't forget to tune in every Wednesday live at 7 p.m. Central Standard on YouTube for Wind Down Wednesdays with Ebony. That is your chance to ask any mortgage or real estate question live. Get real-time tips and strategies and clarity. Learn how to navigate the interest rates, credit approvals, refinancing, investing, and so much more. So just head over to YouTube to search for Home Loans Network and hit that subscribe button so you'll never miss an episode. Again, this is Ebony Biko with Home Loans Network, reminding you, don't just get qualified, get informed, get prepared, and get pre-approved the right way. I'll see you on my next episode as well as on YouTube every Wednesday at 7 p.m. Central Standard for Wind Down Wednesdays. And I look forward in helping you on your home ownership journey.